Hi, my dear investors. The quarterly results of luxury manufacturer Burberry were disappointing with a drop of sales of close to 7%. And this caused a sell-off not only of Burberry stock but also of LVMH. However, while Burberry has structural problems, LVMH performs much better. Buy the dip at LVMH, my opinion in this video. And my name is Thorsten Tiet, and it's all about investing in quality stocks to profit from sustainable capital gains and growing dividends as well. And LVMH is such a quality stock, and maybe we can buy it cheaply right now. No buy and sell recommendation. By the way, please take care of your own money. Anyway, you get my more solid opinion about the stock. Here we see the press release of Burberry, and that Burberry faces structural problems gets clear if you read this. They talk about transition to our new modern British luxury creative blah blah blah. So they are not transitioning because everything is running smoothly, and they say that it became more challenging. In general, luxury brands face headwind. Yes, it's true. Also, the latest quarterly report of LVMH published back in October was disappointing, but they did not lose revenue like Burberry does. You can see it here. They gained revenue, 9% revenue increase. But analysts hoped for more. They hoped for about 12%, and this already led to a sell-off of LVMH. But LVMH in general still performs very well. Their next earnings date will be on 24th, 11 days from now, from recording this video. And let's check in our beautiful screener here the luxury stocks. And wait, I want to get them, and I will show you. Here they are. And these are the luxury stocks you can invest in. And you see, luxury is firmly in European hands. So this industry, if you want to invest in this industry, there are no American stocks you can invest, but it's mostly from Europe, and here especially from France. And you also see that Burberry, with market capitalization of 6.2 billion, is a dwarf against the other ones, especially against LVMH, one of the European companies with the largest market capitalization. Now it's close to $370 billion, although the stock dropped dramatically. And LVMH has a dividend yield of 1.9%, dynamic dividend growth of about 60% per year. And you see here, it's even a 10-bagger if you go back long enough, and even of the last 10 years, they made capital gains of 430%, although there was a correction. And here you can see that last months were not easy for luxury brands. We're not analyzing Hermes or Kering. We focus on LVMH. By the way, you can also see that Burberry's long-term performance for 10 years is really lackluster, with capital losses of 12% compared to 430% capital gains in the case of LVMH. Let's check dividends of LVMH a little bit closer. We go into the dividend turbo, and here we have this close to 2% dividend yield. And 2 years ago, when the LVMH stock was on all-time high, dividend yield was as low as 0.9%. Now it's double as high. And here you get an idea what dynamic dividend growth means. An even better idea you get it if you look at this. First years are still calculated based on analyst estimates of dividends in the next years, and then we progress dividend payments and dividend growth by using the dividend growth of the past. And here if you take this simulation based on the current stock price, you will have double-digit personal dividend yield in 2037. And if it comes like this, you will also be happy about sustainable and really large capital gains as well. Because of course, the dividend will not be 10% if you are going to buy the stock in 2037. I know it's far away, but that's just to give you an idea what dynamic dividend growth means. And in the quality check, you can also see that it's a very solid dividend payer and that dividends are safe. You see that dividends should be safe. If you compare the payout ratio, this blue bar indicates the dividends and this green area indicates the reported earnings. You can also use adjusted earnings, doesn't matter. And the free cash flow, and all of this nicely covers the current dividend yield or dividend, and there's still room for dividend increase. And you can also see here, if you look at, for example, the financial crisis, what they did with dividends. During the financial crisis, the earnings went down from 426 to 370, but dividend was not cut. And the same here, dividend was not cut when the dot-com bubble burst. It was back in 2000, 2001, 2002, something like this. Our metrics, they go that far into the past. So dividends are safe, dividends are juicy, dynamic dividend growth. And now what's important is current valuation. If the stock really a buy right now, is it undervalued? Let's check the multiples. And this is multiples based on adjusted earnings. You can also use reported earnings, doesn't really matter. They are mostly basically the same in this case. And right now we have price earnings of around 21, also this here. And you see that in the past, price earnings fluctuated, but in the last years, they even reached up to 50 or more than 50. But this is an outlier because this is during Corona, while the earnings went down. This is exactly this. Earnings went down, stock price not that much, price earnings increased because of that. This is an anomaly, but these are normal price earnings, and here they were also reached 30, and now we have close to 20, 21. It already indicates that the stock is rather, at least not overvalued, maybe undervalued, we will see sooner. We can also use price to sales, and this is also interesting. Here you see that price to sales in the past till 2017 was around 2, then it was as high as 5, 6, and now it's about 3.7. If we want to use the price to sales ratio as a base for fair value calculation, we need to check the margins, and because here you see that LVMH was able to increase its margins considerably after the Corona or COVID pandemic, and margins before were around 20, 21, and now they are 26.5%. So increased about 5 percentage points. The margins increase. It means that one euro of sales is now worth more than it was before because the margins increase, and you need to consider this when you want to get an idea what's the fair price to sales ratio. Okay, let's check or calculate the fair value of the stock. We use the adjusted earnings and we use the sales to do so. The adjusted earnings, if you calculate the fair value based on this, you get this line out of the box, and it uses a 10-year average. But here's also included the 43 price earnings, and you see that it is not representative to the rest of the price earnings. All the other price earnings, they were around slightly above 20, up to 26, 20, when the stock was hyped, but never something came close to 40. And it means we need to adjust this price to earnings here, and I would adjust it to around 21 where we are right now, and this means we get about an average price earnings or more conservative fair value. And now it looks like this. If we want to add price to sales out of the box, it looks like this. So in this case, LVMH suddenly looks still overvalued, although we have this correction already. But as I already tried to explain, here the company was not as profitable as it is now. So if we look at the price to sales ratio, which is here, we see that in the past we have this price to sales ratio of close to or a little bit higher than 2, I already showed. And in the last years it was between 4.9 and 4.1. So I would say that I increase the price to sales ratio to 3.8, which is slightly below current levels, 3.8, and if I do so, I get similar fair value compared to the fair value based on adjusted earnings. And now we can calculate the expected annual return, in this case till the end of 26. I use a slightly lower fair value based on sales, which is 804 euro, and current stock price is 670 euro, and this corresponds to an annual yield, expected annual yield of 8.4%, which is slightly above the average yield you get on the stock market. This is already, I would say, conservative approach. What you can do if you are interested in LVMH, but you think I don't want to take any risk, and then you can make buy limits, set a buy limit somewhere, for example, 595, and then your expected yield it's already 30%. You can say, okay, 595, then you can just enter here your buy limit, 595 euro in this case, and save it, and then you get an email automatically sent to you when this buy limit is reached. Of course, what might also happen is that it will never be reached, and that on 24th of January results will not be a disappointment, but results will lead to a boost of the stock. It's also possible. Anyway, in my opinion, LVMH is a high quality stock, and it's really worth to add on your watch list. If you want to buy it, when you want to buy it, it's up to you. Maybe you already have an opinion about, then you I'm happy if you drop a comment below. I'm reading any comment, and I will also do my best to answer it. Okay, thanks for watching. See you next time. Bye bye.